Good morning, everyone, and welcome to Save Money on Mandatory New Jersey Disability Insurance. I'm Vinny Civitello, Communications Manager for the New Jersey Business and Industry Association. With us today are Tom Fascino and Jim Iannicelli of Arch Insurance. A few housekeeping matters before we get started. Today's webinar is being recorded and will be emailed to you tomorrow along with the PowerPoint for today's presentation, so be on the lookout for those. If you can't wait for that email, you can download the PowerPoint right now in the Handouts tab of your GoToWebinar panel. Just open it up. It says Arch TDI Webinar. We don't try to name these things cryptically. I'd also like to draw your attention to the Questions tab. Tom and Jim would be happy to take all of your questions, so don't hesitate to write them in as they come to you, and I can't hesitate that enough, or I can't emphasize that enough. Write them in as they come to you, or you might forget what you want to know by the time we hit the Q&A. So now let's get things started. Tom?
Thank you, Vinny. So today we're going to discuss a few topics here about New Jersey disability insurance. Number one, we'll give you good introduction of what's known as statutory disability in New Jersey, how it works and who benefits from it, your options as an employer, and then we'll talk a bit about Arch's solution for actually exclusive for NJBIA members. So I'm going to go over a few things that you may or may not know about this coverage, but there's only 5 states in the country that require every employer to have disability insurance for their employees: California, Rhode Island, Hawaii, New Jersey, and New York. So when we say mandatory, with just a few exceptions on some government employees, every employer in the state, from a small pizzeria on the boardwalk in Wildwood up to major oil companies in the state, are all required to have this insurance for their employees. So who does this benefit? So this is a partial income replacement for your employees when they're unable to come to work for a non-work related illness or injury. And basically what that means is that their doctor has confirmed them as disabled and unable to work. And what they're receiving is 66 2/3% of their average weekly salary, up to a maximum of, for 2018, a maximum of $637 per week after a 7-day elimination period. And they can go out on this insurance for a maximum of 26 weeks. So like I said, this is a partial income replacement. It's not supposed to be a full replacement of an employee's salary. But the purpose of this is that an employee, when they are out, they are able to have some income to take care of matters. And the examples of who uses this insurance we see mostly for maternity leave. So a woman out for having a child. Sometimes we could see it a few weeks prior to the birth, and then several weeks after the birth. You can have an off-the-job accident, you broke your leg skiing or something. That's you're unable to get into the office or to your job for several days or several weeks, or an extended illness that you're recovering from could deem you as disabled and unable to work. And then this coverage kicks in to provide that benefit. So employers in New Jersey have a choice of where they get this insurance from. Now, right off the bat, every employer, I should say, at the beginning, you have actually no choice. You go right into what's known as a New Jersey state plan, and you pay into this plan, into the state, and they manage your claims. But you do have a choice once you're established in the state to go out to the open market and actually shop for this insurance and see if you can find something that's more suitable to your company, either in price or service. It's an important point to note. We are going to go over this in a little more detail in some of the coming slides, but you do have that choice to kind of go and shop that. But what's important to note here also is that the New Jersey state plan, 95% of the employers in the state are inside that plan. And the reason is that, number one, like I said, you automatically are put into the plan right from the beginning. As soon as you register your business, you're in that plan. And it's not well common knowledge that you can actually move your move your coverage out. But regardless if you have your coverage inside with the state or with a private carrier, New Jersey sets the rules on how the state, on how the benefit works. So they set the benefit amount on how much you can receive. And actually that does change. The percentage doesn't change every year, but the maximum amount actually changes every year. They also set how much the employees contribute, what that contribution rate is. That is set every year by the state. And also they set the wage cap, and we're going to go into some more detail on how those things work. So what happens, the way this coverage is paid for is it's paid for by employee contributions, and you see on the slide on your left, and then from employer contribution on your right. So those two groups together pay the premium for the plan for the year. You'll see there that employees contribute 0.19% of their wages up to a cap. That percentage is set every year by the state. And I'm sure most people on this call are HR managers, and you're very, very familiar with that. The other side of that line there, what the employer pays, is based on basically your claim experience, how many claims you've submitted over the last few years, and the state adjusts your rate up and down based on that. So again, the two together kind of build that, how much you're paying per year. What I'd like to do here is I'm going to send this over to Jim Iannicelli, who's going to explain, a little more detail on how you pay the state, what your annual rate is, and kind of how you can find that out.
Thanks, Tom. Good morning, everyone. Yeah, so how much do I pay the state for coverage? As Tom mentioned on a prior slide, it is basically split between the state set employee contribution rate plus whatever your final disability insurance rate is determined based on your claims experience by the state of New Jersey. And how do you find that out? So basically, the state every year sends to every employer the notice of employer contribution rates. The top part of the form explains your unemployment insurance contribution rates. It shows how much you've paid in to that fund and how much benefits have been paid out under unemployment insurance and what your final unemployment experience rate is. On the bottom part of the form, and this is where the program comes in, is the detail regarding your disability insurance contribution rate. Again, it shows since you've done business in the state, how much you and your workers have paid into the fund and how many disability benefits have been paid out of the fund. And based on a formula that the state uses, a final disability insurance rate is derived. The final disability insurance rate is only the employer portion of the rate. It does not include the state set employee contribution rate. So basically those forms, just to kind of back up a second, those forms go out. The state runs their fiscal year from July through June. So you'll be getting your new report. It takes them a few weeks to get those reports out. So you should be getting those reports probably around the third week of July. Those new reports will be coming out. Just to explain how the employer's rates are set, every employer starts with a rate of 0.50%. The rate scale is 0.10%, and again, this is all based on the taxable wage cap. It's a percentage of taxable wage cap, which for this year is $33,700 per employee. But the state rate cap for employers ranges between 0.10, which you'll see all the way at the bottom left of the grid, all the way up to 0.75%. 0.10% is a rate given to employers who have the best claims experience. The ratio of claims to premium is very low. The state also sets a rate cap for employers, and that's the highest rate the state will set, and those are generally for groups that have higher claims than they do contributions. And then you'll see on that right hand column, that's the state employee rate of 0.19% for this year. So again, lowest final disability insurance rate that would be on those contribution forms that we just saw, 0.10%, highest 0.75%, and you can have any of those rates in between indicated on those forms. So what we did here, this is example number one of an employer currently in the New Jersey state plan. We used an example of a company with 50 employees and $1,675,000 in covered payroll. If you look on the left side, using an example of 0.25%, again, that's the rate based on that rate range of 0.10 to 0.75%. So you're going to have your employer rate of 0.25%, your employee rate of 0.19%. On the employer side, the state plan cost is going to be the covered payroll multiplied by the employer rate for an employer cost of $4,188 annually. On the employee side, you just take that same payroll, multiply it by the employee rate, and the annual cost for the employees is going to be $3,182. When you're with the state plan, in addition to your rate cost, the state also bills you as an employer for certain disability insurance assessments. If you look all the way down at the small print at the bottom, they bill for the state plan 4F deficit assessment, and they bill for the state plan experience rating assessment. It's basically an assessment to pay for the cost of the state to do business. So using that same covered payroll amount, in this example, the employer assessment cost would be $398 annually. So the total annual payment to the state for this particular group would be $4,188 for the employee contribution. I'm sorry, the employer contribution, plus $398 paid by the employer for the disability assessments, plus the $3,182 employee contribution for a total cost of $7,768. So that's what this all in, that's what this employer would be paying the New Jersey state plan. Another example would be a group with 150 employees at a little over $5 million of covered payroll. In this instance, you'll see the employer rate is the lowest rate that the state will charge, that 0.10% rate, which was at the bottom of the scale that I showed a couple slides ago. So in this instance, you'll see the same going over to the right-hand side. You'll see the same employee rate that never changes regardless of the employer rate. So in this instance, you'll have a $5,025 employer rate annual charge, plus those same assessments that we spoke about, which are based off of covered payroll, $1,195, plus the employee portion of the rate, which is $9,547. So the total annual payment to the state would be $5,025 contribution plus $1,195 assessments, both paid by the employer, plus the employee contribution, $9,547 for total annual payment of $15,767 being made to the state plan. So Tom, I think you were going to jump back in on the employer options.
Yes, thanks, Jim. Yeah, so those are two good examples of how, what your costs are today, and I don't think, a lot of the folks I've spoke to around the state really understood exactly how that was all put together. So I think those are two good examples on kind of clearly laying it out, how that works. So that runs through kind of what the state plan. I would say the majority, if not all of you on the call today, probably have your insurance through the state. What we wanted to do was now kind of talk about what your options are as an employer and why you may, look at other options besides the state plan. So like I had mentioned earlier, all of you have the option to move, this coverage out of the state plan to a private carrier. And when you think about it, you think about all the different insurance that you have to run your business. You shop all of those on the open market, and we all do that personally with our car insurance and homeowners insurance. And we go to a broker and we see what's best, for us. So we're shopping online for those. Well, as a business owner or as a manager in your company, you have that option also with this. It's just not as apparent because you're automatically put into the state plan in this. So, in our experience, in people that we write their coverage or people that we talk to around the state, why would they move? And I'd say number one and two here are depends on who you are and what's more important to you. Some it's cost savings. In many cases, we can save you money on what you're paying to the state overall for your coverage. And remember, we can't change what the employees pay, but we can certainly change what you're paying as an employer. Another very important point is just improved claim services. In a lot of the HR managers that I've spoke to around New Jersey, there's one common theme is that, claim service is very, very important. You want to make sure your employees, if they are out on disability, that they're receiving their checks timely, that they're being processed accurately, and the state, can be sluggish at that. Would they even put on their website that you can expect, several weeks turnaround when processing a claim. Another benefit to moving outside is, many employers want to give their employees enhanced benefits, so they want to offer a benefit level higher than what the state, has set. So those are kind of the three reasons you would see, someone considering moving out of the state plan. So how does an employer do that? How do they go to a private carrier and shop this insurance? Number one, find someone, right? So you want to go to a reputable, approved insurance carrier in the state to get a quote from. And they'll guide you through what you need, what information you need to give them to provide you with a quote. In New Jersey, you do need to hold something called an employee consent election. This is something that's been written into the law since 1949, I believe. I have that correct? 48, I'm sorry, I'm corrected here. And basically what that means is you need to have a simple majority of your employees that say, yes, we agree to having, moving our coverage from the state to a private carrier. And the reason that the state originally put that in place is because the employees are making a contribution to this plan, and they wanted them to be part of the decision. Outside of that, signing an application. Oh, I'm sorry. Let me go back to the simple majority. It's 50% plus one. So if you've got 10 employees in your company, you need to have 6 people sign the employee consent election. So right. So outside of that is really just kind of signing the application form, and then your private insurance carrier, would take it from there in submitting everything to the state and making sure that you are, moved out correctly and that there's no interruption in your claim service. So why don't more employers move out? I showed you earlier this little pie chart on how many are with the state plan, how many are with private carriers. A lot of it comes down to knowledge, just knowing that you have this option. Jim and I spend a lot of time speaking with employers in the state, certainly with a lot of the members here at NJBIA. And, we hear the same thing every time we talk about. A lot of employers go, oh, I didn't know you could do that. I didn't know you were able to move out. And so, a lot of it comes to that. And for employers that may be larger in size or have many locations, getting that employee consent election completed, can be a deterrent because they look at it and say, oh, I have to go around to all the employees. But trust me, many employers do it, and it really is not as big of a deal as it looks at the beginning. But these are kind of the 2 reasons that we see in our experience of why a lot of employers might be hesitant in moving from the state plan. Something I wanted to address here, and working with NJBIA, we hear about this a lot, and this is kind of their mission here is to make it less expensive to do business in New Jersey. This is a great state, it's a great location, but as you all know, doing business here is expensive. You have many expenses coming your way in the state, and NJBIA is really doing what they can to try to reduce those expenses for the employers. And that's one of the reasons that we're here. That's why they brought Arch on, is to give you kind of another option, another way to help you save money in the state and try to make it more attractive, to stay here and do business. So let's talk a bit about Arch Insurance and our partnership with NJBIA. So like I just mentioned, NJBIA is trying to make it easier for all of you to do business here. And so bringing us on, when we first talked about it and explained that every one of your members, has this coverage. And the majority of your members probably have not moved to a cheaper option than the state. So that's what made Arch attractive to this association, is that we can help, we can find you a way to reduce expenses. So we built that partnership. I guess we're coming up on 2 years now, and we are helping many of the members already in what they're doing, in the way that they are processing their claims and getting their disability insurance. You may have seen some of our ads out in the magazine or online on different ways you can save. So you probably have seen the name around over the last 2 years. So what are we doing for the members? So Jim's going to go over in a minute kind of the special pricing that we've put together for the NJBIA members. He's also going to go over something that we do where we help stabilize the rates of the members, where we kind of put all of the members into what we call one insurance pool, and we evaluate the members together and not individually. So that gives you the chance to kind of have some stabilization of your rates, so they don't just go, just don't go up the next year after you've had, a couple of claims. Arch pays that annual assessment fee for you that Jim was pointing out on the example. And something to really note here is that there's no additional cost to employees if you were to move. Written into the laws in the state, the cost of the employee is always the same, whether it is whether they're with the state plan or if they're with a private insurance carrier. Something we take a lot of pride in is our fast claim payments. Like I had mentioned earlier, the state takes on average 2 weeks to process and pay a claim. We pay our claims, process and pay our claims in 4 days or less. like I said, we take a lot of pride in that. It takes a lot of work to make sure we have our team always kind of, well tuned to process quickly. But that's our service, and that's what we kind of live and die by that. And like I said, we speak to a lot of people around the state, and especially HR managers. This is something that they kind of all agree on, is that this really needs to be done quickly. And so that's probably the biggest point here. And another option for employers is that we've got some online tools for you. Online FICA reports, online claims reports, so you can kind of manage your claims a little closer, and kind of so you know who's out on disability, when you can expect them out, and all of this is online for easy access. Okay, I'm going to turn this back over to Jim, and he's going to explain kind of our discounting and how things kind of work with the members.
Thanks, Tom. Okay, yeah, so we were talking about before the state of New Jersey rate range from 0.10%, which is all the way at the bottom of the left, all the way up to 0.75%, which is at the top of the left-hand column. So basically, for NJBIA members exclusively, what we've been able to do is to give guaranteed savings all the way up from the 0.10% to 0.50% rate range. If we'll just use an example across that bottom row. So if you look all the way to the left, if your rate with the state of New Jersey is currently 0.10%, Arch will take that to a no-cost employer rate. We do still have to charge the 0.19% state employee rate, but an employer in that rate band would see 100% savings. And we kind of take it up the line. If your rate's 0.15%, the next row up, the Arch would charge you 0.09% as an employee. If you look all the way over to the right, you'll save 40%. It keeps going up until 0.50% will take you to 0.47%. You get 6% savings. Any groups that have a 0.55% to 0.75% state of New Jersey rate, we do underwrite those cases. And by underwriting, we mean we look at your prior premium and claims information that is on those state notice of employer contribution forms. And in many of those instances, we can still offer savings because the state, again, when they set their rate, they go back to the first day that you as an employer has done business. What Arch does is we look back 3 years and we say, okay, what's transpired during that time? And in a lot of instances, employers overall, since doing business, have submitted a decent amount of claims, but maybe within the past 3 years, those have slowed down. So Arch would be able to offer you savings in those instances. But that's basically how the program works. It applies to groups with 250 or less employees. Any groups that have more than 250 employees, we can still provide you with a quote. It's just that we can't offer those guaranteed discounts that are shown kind of on the bottom half of this grid. So when we look at kind of real numbers, we spoke earlier about a company with 150 employees and about $5 million in covered payroll having an employer state rate of 0.10%. So the employer would have that $5,000 cost with the state plan, plus the employer assessments, plus the employee contribution, and their total cost would have been $15,767 with the state plan. Now, if we take that same company and we put them under the NJBIA program, we're going to take that state rate of 0.10%, and the ARCH rate is going to be 0. So there's going to be a 0 employer contribution cost, and we're also, and this is written within the law, that when a private carrier takes over coverage, we pay the disability assessments on behalf of the employer. So we're going to wipe out that $5,025 contribution cost and the 11, I don't remember if it was 95 or 05 cost. And so you're only going to pay that employee contribution rate. The employees are going to pay the total cost of the coverage. So the total cost goes from $15,767 to $9,547, and you would have $6,222 in employer savings. So in essence, you would pay nothing for the ARCH plan. Again, this is a group, 150 employees, $5 million in payroll at the state 0.10% rate. So, Tom mentioned before rate protection. So people will bring up, well, what if this is kind of a bait and switch, situation? You take me in, my rate's low for, a year, and then, after a year you increase my rate, 50%. Basically, within, not only are we saving you as the individual employer money, you also become part of the NJBIA program. And what we do is we take all of the experience for all of the NJBIA members participating in the plan, and we put it together. So there's a strength in numbers mentality under the program. So even if you have, as an individual employer, you may have a bad year, a couple people go out on disability, as long as the overall NJBIA program is running within a tolerable loss ratio, you won't get a rate increase. Full disclosure, if the entire NJBIA program does run above a tolerable loss ratio, only the members that had less than desirable experience would have a rate increase. So you'll never have an instance where your experience has run well and you're going to get a rate increase. That never happens under the program. Basically, having this pooling mentality kind of waters down the experience for each participating member. So, how do I get a quote? Basically, the best thing to do is to give us a call or send us an email. The contact information is on the above left. What do I need for a quote? It's best to have your most recent notice of employer contribution rate form. A lot of people say, we get them once a year. I don't know what I did with my form. We understand that. If you don't have the form, then we would just need your employer tax ID number and the approximate taxable wages, and then we can get the data and send you out a quote. Whenever we send out a quote, we do send a side-by-side comparison of the cost, the ARCH costs under the NJBIA program and the state plan costs. So you'll see side by side, what am I paying now and what would I be paying to ARCH. The ARCH claim process, basically what we've done is we made the form basically the same as the state form. We don't want people to get confused. Really the biggest difference is we just rebranded the claim form so it has all of the information to submit the form to ARCH. It's the same thing. The employee completes their section, doctor completes their section, and you as the employer complete your section of the form, same as you would be doing with the state now. And then it goes over to ARCH claims. Within 4 days, we review the claim and either set up claim payment, request additional information if needed. The claim payments must be reported on employees' federal income tax return, and FICA deductions do apply. As Tom mentioned before, you don't have to wait for a paper report from us. At the end of each quarter, we can set you up with online access where you can go in and pull those reports whenever you need it. We know sometimes payroll providers want, especially at year end, they want those FICA reports even prior to year end, or they tell you they're going to fine you. So you can go right in and get those reports. We have to by law send out the paper reports as well. So you'll still continue to get quarterly cumulative FICA reports, but you do have that online option as well. And just one other kind of added bonus, we send W-2s for any payments that we've made for the year. We send those at year end. We only send those to our policyholders. And the reason for that is some groups want to use the ARCH W-2 as a supplement to the worker's regular W-2 form, while other employers have already integrated the sick pay information into the employer's regular W-2. So then they would just discard the ARCH W-2 form. We report nothing to Social Security Administration. So it's strictly an employer's option as to what they want to do with those ARCH W-2 reports.
Thanks, Jim. We have a couple questions here already, but I want to give everyone a moment to type in anything they have. While I'm doing that, I'd like to take a second to remind you about the Handouts tab. We get a lot of questions from people about how to download the slides, so just open up the tab marked Handouts in your GoToWebinar panel, and the file is right there for you to download. You can also just wait until tomorrow, and they'll be emailed to you with the recording of today's webinar. And there's the Questions tab. If you have a question, type it in right there, and I'll make sure our guests answer it, and don't be shy. Tom and Jim are huge experts in this field. If you were thinking about, you came in today hoping to hear one thing and maybe they didn't touch on what you were hoping to hear, this is the opportunity to take advantage of that. If there was something they mentioned that maybe you want a little bit more clarification on, here's a great opportunity to get that too. So with that out of the way, we're going to jump right into our first question that comes from Sam, who would like to know, do we have to get 51% of the employee's permission before we switch carriers?
Yeah, great question, Sam. Yes, so if you are currently participating in the state plan, it is written into the law that you have to obtain 50% plus one of employee consent to move to private plan coverage. If you're already with a private carrier, you do not need that same consent to move to another private carrier. It's only when you're moving from state plan to private plan coverage, and it only has to be done once.
Very cool. Adam would like to know, when was the last time the rate increased for the group? So you were mentioning that if like the larger pool. Let's say there's a tornado or something and we all get hit,
Yeah. Thanks, Adam. Yeah, there has not been a rate change for the entire group. The pool has run well within the required loss ratio.
That's awesome. So Roger asks, how hard is it to get the employee consent?
Well, it really depends on the company, and kind of how you're able to get access to all the employees. We've seen every size company do it. Obviously, a smaller company, it's easier to kind of call everyone into the conference room for a few minutes, explain the plan, and have the employees sign the piece of paper. Sometimes employees are skeptical because they're like, why is my employer asking me to do something? But don't forget, the employees get a big benefit out of this. I mean, we can't change what they're paying into the plan. That's set by the state. However, we are giving them much better claim service, and that's what's real important to the employees. They're really not paying that much for the plan per year. So if they were to have a small percentage difference, most people wouldn't even notice it. But what they do notice is when they go out on disability, when you need the plan, you absolutely notice it when you are not getting your claim check on time. Now we can help. We have a service that we work with to help gain that consent. So if you're a larger employer and you're concerned about getting those consents, we can work with you and we can send a group in there to help get that done. Especially if you've got, like I said earlier, multiple locations. You might have 2 locations in northern Jersey and 1 in southern Jersey. How are you going to get all those? Or if you're maybe a chain restaurant or something, we can help and get that done. We've done this many times, many different size groups. So there's always a way to get it done.
Kim asks, if we change to your plan, do you bill us?
Yes. Basically what would happen is Arch bills on the same cycle the state of New Jersey bills on, which is quarterly in arrears. So what happens is when we write the plan, we file it with the state of New Jersey, and they in turn formally approve the Arch plan, and they turn off the billing for the state plan disability. So on your NJ 927 forms, the rate for disability would be zeroed out, or instead you would receive an invoice at the end of the quarter from Arch.
Terry would like to know if disability is the same as paid family leave.
No, it is not. Paid family leave is now in place in New Jersey. And so there's a difference between disability insurance and paid family leave. Disability is partial income replacement for when you are unable to come to work for disability, like I mentioned earlier, maternity or an illness or something like that. Paid family leave is to care for others. And so it's to relieve family stress or family pressure from when you're unable to come to work as a result of some event in your family. It's mostly used, paid family leave is for what we call bonding. So you've had a new baby or you've had a new adoption, you've got this new child in your house. It's for the father or the mother. So it's for you to be there to to take care of that child. So that's what paid family leave is for. Disability insurance that we're covering in New Jersey is for the strict disability that we spoke of earlier.
Connie asks, when can you switch over, or do you have to wait until your insurance renewal is up?
Great question again. Yeah, so the state allows a coverage move 4 times a year. It's basically as of the next, the first date of the next upcoming calendar quarter. So they allow a coverage move 1-1, 4-1, 7-1, and 10-1, but you can't go backwards. So as of, if you were to move today, the next allowable date would be July 1st, 2018. Then if for any reason you can't get it done by that date, the next date would be October 1st of 2018. You have to have all the paperwork done and the employee consent completed prior to the effective date.
Daniel asks, if I move to you, will it cause any issues with my payroll provider?
That's a question we get a lot. Basically, what we have found is as long as you notify your payroll provider in advance of the upcoming coverage move, we see very few problems. When we do see a problem is, someone switches to Arch coverage effective, say, April 1st, 2018, and they notify their payroll provider at the end of May. Then things tend to get a little messy. But as long as you've, again, notified that payroll provider in advance, it's generally a very smooth transition.
We got a couple more here, but keep them coming. So Denise asks, are your benefits any different than the state's benefits?
No, our benefits are exactly the same. Again, by law, we are required to offer the exact same benefit. So that's always there. What we can do above what the state can do is we can provide you with enhanced benefits. So we can pay actually higher than what the state pays. So you can set up a plan with us, to have that higher benefit, than the state. But otherwise, it's exactly the same.
I got one more here from Sean, but if people want to keep them coming, we'll keep this rolling. So Sean asks, is there any advantage to switching to you for my employees than the public plan?
Yeah, so basically it's twofold. Again, as we had mentioned, the employees can't be charged any more by law to go with an Arch plan than they would with any other plan, including the state plan. The number one advantage is, you're out of work, you don't have any income coming in, and we're going to get that check to you much faster than the state. Secondly, you're always going to have a person to talk to at Arch. We hear a lot, and the state is called. It's very difficult to get to someone to talk to regarding your claim. And there are some actual tax savings when you come to an Arch plan. And the reason for that is employees are taxed based on the percentage of the contribution that they pay to the total cost of the plan. So if an employee is paying the same amount to an Arch plan that is less expensive than the state plan, they're paying actually a higher percentage of the total cost of coverage, and therefore their benefits are taxed at a lower rate. So they actually see some extra money in their disability benefit check from Arch. So claim service, a little extra money when you're out and you need it, and really having people to talk to about your claim are the biggest advantages to the workers.
Well, that looks like all the questions we have, so it's as good a time as any to bring this to a close. Don't forget, all of you will be receiving a recording of today's webinar and the PowerPoint slides via email. Lastly, when you close out of the webinar, a survey will come up on your screen that we hope you'll fill out so we can understand how to best provide you important information in a webinar format. Our next webinar, NJBIA Live from the State Capitol, will take place Wednesday, July 11th and focus on the state budget. So by all means, feel free to register for that one right on our homepage, and we'll see you there. So until next time, for Tom Fascino and Jim Iannicelli, this is Vinny Civitello thanking you for being with us this morning and wishing you a great day.